Are you struggling with indicators and finding trades because your charts look like this? A lot of analysis paralysis. I felt the same way until I discovered price action trading. So I'm going to show you right now how you can trade without ever using indicators again, and then you can decide which will work best for you. So with that being said, let's get going. Okay, Clifford, the 25-year trader, welcome back to the channel. So today, so the thing is, when I first started trading, I used to use a lot of indicators. And, I was buying system after system, and it just like, I found a few winning trades, and then, and then they started lagging, and then I couldn't find winning trades again, and it just got frustrating. And as I continued to learn the trade over the last 25 years, mostly futures, I discovered that, technical analysis can work, and specifically price action trading. And the more books I read, the more I fell in love with price action. And then once I finally learned how price action worked, I never looked back. And it's been an absolute game changer. So here's how you trade with price action in the most simplest way. So let's clean up this chart. Let's get rid of all this, kind of like spaghetti colors we got going on here. All right, let's knock all this out real quick here. This one. Okay. So now we basically have a naked chart, right? Pretty much, right? There's a naked chart here. Okay, naked chart. There you go. So basically, I used to only use the daily charts, but then I figured out this can also apply to day trading as well. So when you're dealing with a naked chart, you're basically only looking for two things. Charts, for those who are new, they're basically displaying the price. So in other words, like with an indicator, the problem is that I found is that let's say the market moves sharp, right? Like let's say you get a large move like this. The indicator will lag a lot of times because it won't catch up to the move until like a few candles later or whatever, right? So I used to get frustrated with that. But with price action trading, basically, instead of using indicators, you're just using price. Now, there's other things like volume and stuff like that, and that kind of helps a little bit too, but I don't even use volume to be honest. I just use the price action and it really works good. So here's how you would use it. So the first concept you want to learn if you're new to trading is support and resistance. These are like the kings and queens of the market. They are like royalty. I mean, think of support as a floor. Think of resistance as a ceiling. And the market will test these ceilings and floors over and over again, no matter what time frame you're looking at. This is a daily chart. So for example, support and resistance, another way you could think of it is like supply and demand. Basically, when there's high demand, buyers come back into the market, and that's support. When there's, I should say, more supply, sellers come into the market. Think of it like that, okay? So what you're with price action trading, basically you're trying to find support and resistance levels where the market is most likely to react. So for example, looking at this chart here, this is the daily chart. Where is resistance? Where is support? You have to be able to learn to find it. It's not that hard. Take a line, take this here, horizontal line, and it's very simple. You're looking for a ceiling in the market. Okay, I'm going to use a yellow line here just to make this really easy. Resistance is the ceiling, right? This is a ceiling. See how the the price of the market tries to hit the ceiling, right? It forms a ceiling, touches the ceiling again, can't break through, at least not yet, right? Here's another ceiling. Here, all you're looking for is basically think of resistance as like the highs and lows of the market. Again, resistance is the ceiling, support is the floor. So the market moves through floors and ceilings. As it breaks through floors and ceilings, it creates new floors and ceilings. That's really all you got to remember. So if you're trading without indicators, you just need to know when the market's going to move and touch these floors and ceilings and when to buy and when to sell. So here's how you do that. So this is the ceiling right here, right? So where is the floor? Okay, let's take a look. Well, I see the floors right here. Why is that the floor? Because look, the market touched this price, and then it backed away, right? And then it touched it again here. This makes the floor more significant. You see? Um, so if this is the floor and this is the floor, basically you want to buy at the floor and you want to sell at the ceiling. That's how support and resistance works. So, for example, depending on which market you're looking at, and this is why you don't need indicators. This is how powerful this stuff is. Let me show you. Actually, let's go down to a 5-minute chart. So now we're going to go to a lower time frame. I just wanted to show you first on the higher time frame so you understand. Um, okay, so obviously the market can move three ways for those who are new to trading. It could be an upward momentum. We call that like an uptrend. It could be in downward momentum. Usually that's a downtrend. And then it can be in what's called a range, kind of like sideways. So, um, so basically the way it works is when the market opens, it's going to hit one of these types of momentum. It's going to be in an uptrend usually for the day, or it's going to be in a downtrend, or it's going to be in a consolidation. So, for example, if I wanted to buy this market, right? This is what? This is the S&P 500, okay? Where is my floor? Where is my ceiling? That's all you got to know. So let's find it. I see a ceiling here. Why? Because the price hit this level and backed off. To me, that's a level that the market is hesitating to break on this 5-minute candle right here. Where's the floor? Pretty simple stuff right here. Why is that the floor? Because the market tested this price and backed off, creating a floor. Here's another floor, by the way. See that floor right there? Tested, touched it, backed off. Tested, touched it, backed off. Tested, touched it, backed off. Now, so so a lot of times when the market breaks through ceilings and floors, it will come back to retest the previous support level, and that's how you find a trade. For example, let me see. So actually, we could go to, you know what? Let's do this live. Let's go to today's market. Let me fast forward here real quick. Okay, so here's today, right? What is it? Monday, May 26th. Okay, so really quick, where's the ceiling? Where's the floor? Here's the ceiling. See that? See that price right there, 74.15? Touches it, can't break through. Touches it, can't break through. Touches it, can't break through. But then finally, and this is why you want to watch the closing price. When you get a closing price, a closing candle above resistance, that's a sign that the market usually wants to move higher. But you don't just want to buy on the closing price above resistance. What you want to do is look for the support floor, which is down here. Why is it down here? Because look, remember the market can move three ways: uptrend, downtrend, or a range sideways. Well, right now we're stuck in a range, right? But look, the market broke above resistance here and it closed. That's your signal to buy, but you never want to buy at the high. What you want to do is place an order to buy at the closest support level possible. And again, you know that support is down here because where's the floor? Market tested, rejected this price. That creates the floor. Here it started. Actually, let's say you didn't know that candle was coming here. You saw the floor here. But look, the floor held, right? So if the floor held once, the floor held twice, there's a possibility that the floor could hold a third time. And that's when you buy. And look what happened. Today, the market tested that floor right there, 74.07. So if you're trading the S&P 500, what I would do, I would I would wait first for the signal, the buy signal, the close above resistance. In this case, it's 74.15. Market closes above that price. Okay, now I have a buy signal, but I don't buy. We don't want to buy at the high. We want to buy at the low. So place your entry order at support and put your stop loss underneath the next floor, which is down here. Go like this, 74.08, put a stop loss maybe, try and get under this floor. If you could get under this floor, that's even better, but depending on how much you want to risk. I mean, usually I find 15 points is enough on the S&P. So as long as your order is here to buy, you're buying at support and your stop loss is underneath another support level. So think of it almost like a double fortress. If this support doesn't hold, then this support might hold. And if it does, you're good. And then all you do is you set your profit target. So I mean, if you're risking 15 points on, let's say, the micros, put in a profit target of maybe 30. That's 2 to 1. You could be wrong 50% of the time and still lose money. You're going to get stopped out sometimes. These ceilings and floors don't hold all the time, but I would say about 80% of the time you'll find that this strategy, ceilings and floors, trading with support and resistance, can work. And that's about it. So I mean, it really is that simple. You don't need indicators. You just got to be a buyer at support and a seller at resistance. That's the best way to go. And if it was a downtrend and you're going to try and short, same rules apply. Instead of selling, then you'd be a seller at resistance and a buyer and a take profit at support. So I hope that helps some of you who are new to trading without indicators. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing all of you guys in the next one. And as always, my friends, never risk more than 1 to 2% of your account on any given trade. And always, always, always remember, expect the unexpected each and every time you enter the market. Good luck this week, guys.